Hello and welcome. It is Sunday, the 19th day of February 2017. Let's take a look at the gold market, and I'm going to be using freestockcharts.com for this particular video, which can have the 18 average band that I usually show within this as well. And within the moving averages, the way I have it set up is I have the highs and the lows. I don't need the close, so I have an 18 period, the average type front weighted, and the lows and the highs as well. Therefore, within such, I can see just by putting a line here that previous resistance has become support, and it is since lifted from that period. And breaking above this point, well, that would look to make it for another leg higher. Let's look at this weekly now, and the much larger pullbacks comparable to silver. Interestingly, this went from a level of 1205 down to 1188, or a situation where it lost over 1%, where silver had a small up week. That's interesting in itself. However, the pattern is relatively the same. You come from a key bottom, you stabilize within the band, and now you're breaking out above it, looking to establish resistance. I like to see it come up maybe a little bit higher first, but nonetheless, breaking resistance, you got to think you can maybe chug in a new high or test another level up in the higher 1200 area. Let's move this on now to the monthly chart, where we can see the highs from 2012 or 2011 in at 1921, and the lows in at 1045. As far as how this works within the band, you've got this declining move, break above it, establish resistance, come back to support. It's simple now. Either it's going to break above because the next step is breaking resistance, or it's going to ultimately fail. This whole break from February of 2016 is only going to be a failure, as it's had a decent amount of time above the 18 average of the band. I don't think that's going to happen. I think it's ultimately relatively soon break past this point. Where would I consider resistance to come in at? Well, there's two levels. Linear Fibonacci had an exact hit here, actually, as we can see here. So the next linear Fibonacci is pretty much at the even 1600 mark. Exponential Fibonacci would be a little bit below it. And we'll be using exponential Fibonacci now as we go even more long term, like in here. Because if I put Fibonacci on from this low, you can see how this is just a small way. First one's supposed to be down here somewhere, and it is. And that's why I like the exponential one, because it makes no difference in my book if you use linear or exponential with short-term numbers, but I think you have to use it within the long ones. And when I take this number of 1900 and divide it by the 250, that's a number relatively close to 8, which means it has went up like 8 times its value. Before we look at the Fibonacci, there's a situation where this declining 18 average broke out above here, broke out in the time frame of June of 2002 up to this time frame in 2011. It has since pretty much went sideways. The band is declining, something like it is in here. Getting above this point here, well, that's move back to here, because this isn't bearish yet. I mean, it's broken this support in here, but it hasn't done anything since. You see, let's draw the line in here. Within the first support level, clear noticeable break below in September of 2015. It lasted there for about a half a year, gotten above it. It has now since supported it to what is the higher low. So breaking above this 18 average band, there's the failed move. You're looking to a fast move pretty much to a previous high. Now let's look at the Fibonacci retracement. Enter a high or a low. Well, the high is 1921. The low is 252. Enter 1 for yes, anything else for no. That means if I put in 1, I could put another Fibonacci number in. It's going to calculate 38,261.8. And I do want another one. So I'm going to put in, and I want a higher number, the 76.4. And even the 85.4 as well. Or 84.5, 85.4. I think. Anyway, either way, the 76.4 is the one I want the most anyway. 1189. And this was 1420. Was 1428 anything particular? Yes, it was resistance. So therefore, 1189, let's get that number in there, which practically already is. It says 1182. Okay. So therefore, on the way down, this supported exactly where you would have wanted Fibonacci to do so. On any push higher, well, I got that 428 mark, which is previous resistance. But if this level fails going lower, and it looked like it was going to do so here, because this is telling you that, okay, we supported this area for a while. Now it's time to go lower. We're going down to 884 area, which would be somewhere down here, not even close for where it went, or the previous resistance of 2008, 9, and 10, and 11. No, 8, 9, and 10. And so that would be where it was supposed to go. So this would indicate the failed move. A failed move here should bring a fast move to the previous high. That's how I would look at it. On a break, of course, above this band. Now let's continue this even further, because I got yearly time frame on here as well. I don't got much data though. It's 12 consecutive up years in a row. But what I do have is, I have the data myself of previous years, and I know that in 1980 the high was 850. So let's plug some Fibonacci numbers in then. So the 850 number, this was a 1980 high. And then we're going to look at it within the low of 252. I've had that number memorized for close to a decade now. And do we want to show anything else? Well, let's look at it within the quarterly chart again, because it's just not enough candles. We're going to get the 61.8%, which is, we need upside numbers basically. So let's take a look at this from a 161.8% level. That's how I would write it in. So we'll look at 400, 534, and 1802. 400. Let's draw a line in there. Within 400, it was an area of consolidation. But most areas kind of were to one degree or another. I mean, not really 500, I guess. So no, maybe not. After that, 534, which was the maybe not consolidation, albeit it was support. However, the number of 1802, I think, is pretty remarkable to say the least. Because when we look at this further, this high pierced above it. When we look at the highs starting in this period, we have a high of 1921, followed through with 1804.4. That's a difference of only 2. Only 2. And then again at 1793, 1790, and 1798. Well, Fibonacci said, okay, if we're going to stop anywhere, probably 1800, damn good call. So then, where do we go from there? Let's put numbers in again and look for the 261.8. and that would be at around 6,000. However, we can look at other Fibonacci upside numbers as well along the way. Let's take a look at the one from the monthly chart. That is the one from the 1921 high and the 1045 low. 1045, 1921. Let's look at the 161.8 level and the 261.8 level. And while we're here there at, let's look at the 423.6. So now we get 2,800. This level, which somewhat coincides with the previous 6,000 number, and 13,000. So from my guess, looking at these numbers, on the break of this big 1,800 part, I'm looking for near-term resistance in at about 28. Probably do one of either correct or skyrocket high. If it corrects, go sideways for maybe a month, many months, or maybe correct back down to the 1,800, 2,000 range, either or. Or if there's not resistance there, maybe a fast move up to the 5,000 to 6,000 range. I'm talking very long term, of course, but long term can be only sometimes 8 to 16 months as well, depending on how volatile the situation becomes. So that, now that I'm thinking about it, a while ago, let's just take a look at the yearly ones again. We have this high in at 410 and then the 252. So I'm just curious, and I haven't done these numbers, what I'm going to get what's going to come up. Is it 410? Yeah. So we'll just put in the 161.8, the 261.8, 423.6. After that, I believe is a 685, and then the 1109 is after that. Okay, so the first one's at 554. Let's look at this again through the quarterly time frame, and these are just plugging numbers together and seeing what comes up mainly. So 554 and 900. So 554 brings us somewhere around here. I mean, it was part of the upwards. So then was it 900, I think, followed by, well, 900 was a resistance area level. 1981, which I guess appears below now. So there's two levels that coincided together now at the same point. And then after that, 7,000 and 55,000. But with that being stated, that's all I'm going to talk about. Thank you for tuning in and have yourself a great day. Bye-bye.